Welcome back. Now in room A, but let me remind you that in room B, we have the presentation Analyzing Open Finance with Angelica Arana from Citibanamex. So if you're interested in that, you can change rooms right now. Otherwise, you can stay here for our KYC, Multiple Authentication Factor presentation by Gilberto Pérez from the National Banking and Securities Commission. Let me tell you that Gilberto Pérez is responsible for the regulation issued by the National Banking and Securities Commission that includes the banking sector, fintech, and savings. He also participated in the development of the Mexican fintech law published in 2008 and the issuance of the secondary regulation from that law, as well as regulations for other financial sectors, such as the usage for electronic means, information security, limits in operations, hiring, third-party services, as well as those related to open banking. With over 11 years of experience as a financial regulator, he currently works in the team working on the alignment of prudential regulation for international standards, as well as in propositions in order to issue regulations on sustainable finances. So it's an honor to have you with us. So please, let's give it up to Gilberto Pérez.
Thank you very much, Vicky, and thank you all for your time and your attention. I'm Gilberto Pérez. I'm in charge of the area of regulation at the National Securities Exchange and Banking Commission. And today I'd like to talk to you about some topics that are fundamental for us as regulatory authorities, which are the regulatory framework that exists for KYC, Know Your Customer, as well as the use of authentication factors. I will talk basically about three topics. The first is how order placements for different financial services and products can be done both in person, that is at a branch bank. I'll be referring generally to banks, but I would also like to say from the beginning that everything I refer to is equally applicable to non-banking organizations that take in money, such as the Cooperative Society for Savings and Loan and the People's Financial Society. I'm going to talk about the in-person order placement, what you do when you go to a bank module or branch, as well as remote order placement, which is what you do when you order a financial service or product from your tablet or computer or your cell phone. Toward the end of the presentation, I will talk about the authentication factors, in particular different types of authentication factors in use in Mexico, and the main use for each of them. Beginning with in-person order placement, it's important to mention that any type of purchase that you make, either of passive or active transactions, you can open accounts, in this case only level 4 accounts. Since levels 1 through 3 are low-risk accounts, each bank can open these based on their internal policies, always observing the guidelines given by the Department of the Treasury as they regulate money laundering and support for terrorism, known as the TLD rules. If you want to open a level 4 account in person, or you want to order any type of credit, maybe a credit card or a mortgage loan, this will also be under this set of rules. And if you want to do transactions at the teller window, such as money transfers between accounts or to third-party accounts, or if you want to withdraw cash at the teller window, you will also be under the laws that deal with in-person transactions, which basically requires verification of information, biometrics of the person coming in to place the order. If you want to open an account but you're not a customer, or even if you already are, you will be asked to show official identification. Traditionally, it's been the voter's card, although You can also use a passport or a consular registration, or in general, you can use any of the identification considered under the PLD rules of the Department of the Treasury. But if you show a voter's card or a passport or a consular registry, the financial institution will ask you to put your fingerprint on a reader so that they can save your details of your fingerprint and verify them against the database that the authorities have, in this case, the Electoral Institute, and these authorities will ultimately say yes or no. Yes, it coincides with a 90% of coincidence at minimum, or it doesn't coincide. If it doesn't agree, the purchase or order placement will not proceed. If there is a coincidence of over 90%, the transaction may continue. If you don't have any of these credentials, you cannot use others. It may not be one of these three that I've mentioned, but you have to use two in that case. And in that case, the manager or a branch, or the person in charge of the branch, must give his personal authorization. Also, they will verify your unique population code, or COOP, which is usually on your passport. They will also verify against the National Population Registry. And it's likely that as a financial institution, they will ask for your consent for them to record biometric information in their own databases. This is a facility that we as authorities have issued so that future operations can be faster, and we won't have to be doing online consultations with the Foreign Relations Department or the National Electoral Institute. So they will ask you for authorization for them to store your fingerprint on their own database. In the case of transactions at the teller window, the banks will probably agree with you that they won't need to verify your fingerprint. In this case, what will happen is that it can be done, but the bank needs to be responsible in the case that there are any complaints in the future from customers where it is assumed that there was some identity theft or fraud. In particular, I want to talk about the rules for in-person transactions at the teller window. If you are going to withdraw cash or you're going to transfer to third-party accounts, and this transaction goes over 1,500 UDIs or investment units, if it's less than that amount, you won't be asked for biometric verification. You simply need to show one of the identifications mentioned in the Department of the Treasury regulations, and the bank, based on its internal policies, will decide whether that's sufficient or they may ask for something additional. If this transaction goes over 1,500 UDIs, they will also ask for an additional ID, passport or voter's card. But if you don't have one of those, you may present or use two other forms of identification. The process will be a little bit longer. It's done manually, and the branch manager has to authorize the transaction. But if you use fingerprint verification, the transaction will be much faster. Now, if you're already a bank customer and you have a debit or credit card with a chip in it, you have a PIN, a personal identification number, you can use that for these transactions at the teller window, simply inserting the card in a device that the bank has, a terminal there, and you capture your PIN number, and that should be sufficient for carrying out your transaction at the teller window. They will also ask you for verification of the unique population code with the National Population Registry. If the transaction, again, is over 1,500 investment units, UDIs, if you don't have those common or traditional ID forms, they will ask you for two identifications, and they will do their own internal processing and have the branch manager authorize the transaction. In-person transactions, what I want to transmit to you is that what we seek as financial authorities is to replicate what happens in person in a branch or a bank module We want to replicate that when you do financial service and product order placement from a tablet or computer. They will also ask you to do a biometric verification. There is technology today which allows you, with a mobile unit like a cell phone, to take that picture of your fingerprint, and that will go to the bank and be compared with the fingerprint stored at the Electoral Institute or Department of Foreign Relations. Here, this applies to accounts of level 4. It doesn't apply to accounts in levels 1 through 3. Also, credit orders are subject to this requirement of hiring that is done remotely. There are some exceptions where financial institutions, banks specifically, may not be required to comply if the amount that you are seeking to borrow is less than 3,000 UBIs. There are split processes for customers and non-customers. It's simpler if you're already a customer. You simply have your biometric information verified and the order placement is processed. But if you were already a customer, the financial institute opened your file for you. They have your name, your address, and other information required by the TLD rules. If you're not a customer, they will ask you for a recording. You can do it at home or from your office. There is no minimum duration time. They will just ask that your face will agree with the image that is on your ID card. This identification can be done online or it can be recorded. We're trying to provide ease for potential customers to do this at any time of the day or night that they wish to. But once again, this process seeks to replicate what happens in person. It does require authorization of the Securities Exchange and Banking Commission. And remember that we're talking about opening accounts and authorizing credit over technological means, which means that it would be exposed to possible cyber attacks. So it needs authorization by the respective authorities. I want to talk now about authentication factors. The main message that I want to convey is for you as a customer of a financial institution to have factors of authentication. First of all, you need to be a customer. You cannot be a non-customer and go to an institution and just want to open an account and just want to take out a loan if you're not already a customer. There is a lot of literature at the international level regarding authentication factors. The recommendations internationally consider 3 types of authentication. They're based on something that you know, something that you have, and something that you are. Something you know, in Mexico we have 4 types of authentication factors. The first 2 are within this category of things that you know as a customer. That is, when you call up a call center of a financial institution, they generally identify you with questions to give you access to your account, questions to which the answers have already been recorded before. These are random questions asked by the telephone operator. It may be like, what was the name of your elementary school, or in what city were you born, or what was your mother's maiden name, and so on. These are things that probably only you know, but it doesn't really represent a high level of security. In other words, somebody else could know the answers, and therefore you can't do a lot of different transactions with just that information. As we proceed from level 1, which is the level where there is the least risk, And 4 involves the greatest risk and highest levels of security applied. But in this case, it could be your password that you use when you go into your electronic banking, or your PIN number that you use for your debit or credit card when you do purchases at a business. The category 3 factors have to do with something that you have. They're not so popular now, but in the past, they had those touches on the tokens. Now we have other tests called top tokens that they reside within the applications that the banks use. These authentication factors are of one-time use only. Every time you use it, the device, physical or the top, has to generate a new one. And this, of course, gives greater security than something that you know, which somebody else could know it too, such as a password. And the strongest authentication factor belongs to category 4, and this factor is based on biometrics. Maybe the most common one is the fingerprint, but it could also be the face, the eye, or the voice. And generally, as technology evolves, there are category 4 authentication factors that are more and more robust. These authentication factors are for when you're already a customer and you want to do a purchase or order placement. The fact that we ask for biometric validation through the authorities, such as the Electoral Institute or the Securities Exchange and Banking Commission, that's level 4 authentication. When you go into electronic banking, which is an umbrella of financial services that can be accessed online, the most common are internet or online banking. You use your computer to go to the website of an financial institution. And then there's mobile banking, which is basically the application which you can use on your mobile phone. Any transaction that you use that involves money transfers will require a second identification or authentication factor. Remember that you usually come in with an ID that the financial institution gives you. Then you enter a password, which involves something that you know. But if you want to transfer money or pay taxes or record new destination accounts and so on, all these things that are listed here, you will be asked, in addition, to use a second authentication factor, which can be category 3, such as a token, or category 4, which would be biometric. These authentication factors are very important because they provide greater security when transactions are done. Now, when we're talking about order placement through ATMs or within electronic banking, or online banking, you have noticed probably that when you go to an ATM, depending on the bank and depending on your capacity for payment, you may be offered a loan. And if you accept it, they will ask you to enter a second authentication factor. You enter it, and then the amount is credited to your account. If you want to take out a loan through online banking, you capture this second authentication factor, and the money is deposited in your account. In conclusion, as I said, the regulations in matters of prevention and money laundering, in order to identify customers, is of the competency of the Department of the Treasury. Yet we at the Securities Exchange and Banking Commission collaborate with them so that regulations will not conflict with each other, and we will be able to do a more reliable identification. It's important here to convey that Mexico is aligned with the recommendations and international standards on the topic. That is, what I'm telling you about today is very similar. If you were to do financial operations through electronic media in Europe or the United States, the use of authentication factors is something very common and shared among different countries, and is something that we as financial authorities want to promote. Be aware that it's much safer once you've been identified through your financial institution. They have your birth certificate, your proof of address, your unique population code, and so on. Then you are assigned an identification code, and you can use this subsequently to make faster transactions and, above all, safer transactions. That's why it's important for everyone. This is not a job of the authorities only or the financial institutions, but the customers themselves need to have this culture of care of these authentication factors. My recommendation is, for example, if you have a PIN for a credit card or debit card, don't write the PIN down on a Post-it or on a little slip of paper within the card itself. You may lose it. It may get stolen, and other people would have access to your resources. And it's very difficult for you to be able to complain about that because, in the eyes of the financial institution, both the card and the PIN were used, and what they assume is that the customer knows about this. So I would invite you to take good care of these authentication factors, take care of your information to avoid frauds and identity theft. Leslie, I want to thank you for your time and your attention. And next, we'll move into a Q&A session, and I'll be glad to answer your questions. Thank you very much again.
Adelante. Hola, muchas gracias por su atención.
Thank you very much for your attention to this talk. We do have some questions here, which I will proceed to answer now. The first question is, in the future, could biometrics become the only authentication factor? Yes, the general regulations allow that for that option, as I explained. The factors for authentication 3 and 4 are the strongest ones, and category 4 should be used for these cases. It depends on each institution, but we as financial authorities do want to promote the use of biometrics for doing purchasing of financial products and also for carrying out transactions. Second question. Will all the verifications required for any transaction disappear with open banking? No, that's a good question. I hadn't actually associated these two topics, but that is, open banking is a topic that we're working on, and there will be regulations issued soon. Well, there's an initial portion of the regulation that was issued last year, and it's already in effect. And we will also promote the use of biometrics. In this case, there will be a need for customer consent, and we will be ideally using biometrics, but these aren't topics that are directly related. Operations at the teller window will continue, transfers and so on will continue to be done, both in person and remotely. That will continue. And open banking is a way of sharing information with prior consent from the customer. But once again, that's a good question, and we'll be considering the use of biometric factors, yes, once the open banking regulations are issued. And question 3 says, cyber frauds have grown during the pandemic, which is true, since digital operations have increased. What additional measures or new solutions will be applied? Well, as you know, we have a cybersecurity regimen that is in force for credit institutions, that is banks and development banks, and also for crowdfunding institutions and for payment fund banks, and also for institutions known as fintechs. The rest of the financial institutions, though they do have some guidelines for cybersecurity, though that's not what they're called exactly, but the stock exchanges, for example, have their regulations also. What we'll be trying to do in the future is to try to reinforce controls in cybersecurity for the rest of financial institutions. And we'll be working on that the rest of this year. And probably around the end of this year, we'll be presenting the draft for comments. It's very similar to what we have now for credit institutions, but it's important for everyone in the financial institution to be implementing the necessary controls to protect customers, which is what we most care about as financial authorities. And in terms of regulations, that's what we would do in supervision work. We would ensure that this is being applied, that the regulations are being enforced. These are the three questions. I want to thank you for your attention, and I thank Prosa also for the invitation.
Gilberto, thank you so much for your presentation and also for answering all the questions and comments from our participants.